Hello, trading is closed on December 14th, 2015. Over the weekend I said I was looking for a strong move at the open that would give us some direction. That didn't happen. We piddled around instead. During the futures trade, we traded significantly over Friday's close. During regular trading hours, we traded significantly under it. So I guess it was a fortunate thing that I didn't make a clear directional call. Every time I tried my hand at Elliott wave analysis, I get spanked. I was hoping this consolidation was a 5-wave A of an ABC, but we've now overlapped wave 1, so that count doesn't work. When the market is trending, you don't need MEJT or any other system. You can just go with the flow. But when the market is going back and forth and consolidating, as it did today, that's when the MEJT system really helps one out. Early on, it said ultimately lower prices would print. Here's the target, color-coded. They printed. It said the drop would not stick. The F is a false move. We got a recovery. We continued to drop, but even when we hit 1993, the system said to look for a recovery over 2010 and also optionally, this is a code for optional, that kind of a line, optionally over 2017, and you can see how these targets were hit and how there was resistance over them. When we dropped in the afternoon, the system said the drop would not stick, false move, and that after this time, this price would be recovered, which it was here. We don't have any new targets for tomorrow. So let's take a look at some other things. In general, I think there's a lot of evidence for this being a low, but the nature of the recovery suggests to me it's not going to hold. It might not even hold very long. I don't like the timing of this late rally. The market hit a low, tried to recover all day long, and it wasn't until the last 15 minutes of the day that it broke above the unchanged level. It hit new highs over this high in futures. This is not a time when professionals start to come into the market and bid the market up to new highs. It implies it's the amateurs taking us higher. Even though all these lows were recovered, I don't think it's a good sign, but it would be invalidated if we had a gap up over these highs early tomorrow. If you look at the daily chart, here's your stilt, here's your stilt, here's your diamond. Take the height of the diamond. The system doesn't really say if you use this height or this height, but if you take the height, set it at 38.2%, 100% is the target of the move. At the same price, you have a -3 by 1 Gann fan line right at the low. You have a reversal par involving the lower Bollinger Band at a time when it's flat. If we get confirmation by having the gap up tomorrow and trading higher tomorrow, we have a target of a challenge, but not necessarily a touch of the upper Bollinger Band. We have to see if we get this confirmation or not. At the low, I don't need that. We had a buy signal. I said over the weekend you can't just go long because it could recycle or print in a 913.9 pattern. We got the 913.9 right at the low, giving a buy. However, this is long enough to recycle the pattern too. That means, so you can't have that much confidence in it. Also, when these 9 bars here start this far away from number 13, the signal doesn't always work. What I'd like to see is a quick recovery of the close of number 8, bar number 8, and I at least want to go over the high of number 13, Neither one of those things happened. It could still happen if we gap up tomorrow and futures are up, but to me these are all signs of a weak signal to go long. We did get a Dow theory non-confirmation at the low. The trannies hit a new low. And the Dow Jones Industrials didn't come anywhere near it. That should be a buy. However, look what happened with some other indicators. Here's the late September low on the SPX. We're far over that. Here's new highs minus new lows. We have a greater amount of new lows relative to new highs now than we did when the market was much lower at September's lows. This number is lower than this number, even though the market's much higher. It means that the breadth is not good. We did have a number of indicators that this should be a low, and if we gap up tomorrow, it could have some follow-through, but I'm very suspicious of this recovery. And even though I anticipate there's going to be whipsaws because of the Fed meeting in the end of the year, I think any recovery here is quite suspect. I don't think new highs are going to print, and I think it's only a matter of time until this low falls and takes us much lower. And that's today's call.